Okie dokie. Okay. Euro dollar then. So first of all, looking at the weekly chart of the euro dollar, we are our structure of 133.33 was broken 3 weeks ago. We've traded up very nicely through the 136.90. That was our next significant point, and we are getting continuation. We've had this week is slightly down. It's a natural pullback in a strong move up. There's not much to stop us here in this band between 143.33 and 136.90. There's not a lot of reference technically to suggest this should stall in our move towards 143.33. If we go to the daily, that's really confirmed. We had a decent move down from 143.33 straight to the 136.90 area, and we're making a series of higher highs and higher lows, and currently if we're long this, there's no reason to be out. This day today is weak, but we haven't got anywhere near threatening yesterday's low, so this is very much intact. The dollar weakness is certainly driving this, and so in terms of structural points, our structural long, we're going to take last week's high, which is 140.28. Okay, so we should be long this euro dollar already. If we're not, any kind of structure is 140.28. Okay, that's our structural long. Our structural short is going to be the 136.90, where we traded the level that gave us an area of resistance on the way up, and we get indicated by these two levels here. They were both momentum highs and areas of resistance that we broke up out of. We came down to trade for some time in a sort of congested area, and then it became resistance again, the 136.90. So the structural short in if we're strictly speaking, it's the 133.33. What gets us in gets us out again, but we can use the 136.90 actually as a short point on the daily chart. Okay, so we can't argue with the trend, we can't argue with the price action. It wants to go up, that's our bias, buy or do nothing. So the fresh buys are 140.28, last week's high. Looking at an opportunity on the short term. You can see we're trading. We've trended into this range for a couple of sessions. Our short point is 138.32. Okay, so it's the 2-day low here. It's the bottom of this consolidated area. Our short point is 138.32, and our long point is 139.47 or 139.83. Okay, the 83 is the 2-day high. The 139.47 is basically the 4-day high, and it coincides with the top of the opening range of the US session. It's easier to see it actually when I've got the data out a bit. So the 139, the nearest point would be the 139.47 or the 139.50. The 4-day high, the 139.47, just the other side of the opening range. That is our long point, and our long stop is 138. What we're going to be now, when I did the analysis, the market was actually here, and I had the stop at 138.80, which is here. Okay, and funnily enough, it's the short-term system has given us a short there. But actually, now the market's moved down through that. If you're going to go long here, you'd have your stop below this 3-day low. So the long, if you're going to take the long at 139.47, your stop is going to be 138.56. Okay, so we accommodate this. We accommodate the boundaries of this range pretty much. Now our short point is 138.32. So the short point is the 2-day low, which represents the bottom of this boundary, and the short stop is going to be 138.60. So we'll have our short stop. So 138.60, 138.64, something like that in that area. So if we trade below the 138.32, we're giving ourselves a few pips to. We don't want the market to trade down and then mean revert back into this range, because we can get a move like this back to the top of this consolidation period, this range bound price action. So if we're taking the short at 138.32, we can position our stop the other side of the 3-day low, say at 138.60 or thereabouts. Okay, that's the euro dollar. Let me just stop that recording and save it. Bear with me.